Hi guys, welcome back. In today's video, we will be discussing the Q2FY25 result of four companies. Okay, one is Polycab India, Havells, Ceat Limited, and Nestle. So we'll be discussing the four, and we'll also do a P2P between the three wire and cable companies का जिसका result आया है. That is Polycab and Havells, like we are going to discuss today, and KI, which the result came like a couple of days ago. Okay, so first let us start with Polycab India. As you all know, all of the three operate in the same segment, right? Whether it is Polycab, Havells, and KI, they are a wire and cable company. The only difference over here is, especially when you look at Polycab and KI, is a mix. When you talk about, to whom do they supply this wire and cable, right? Because a certain company can supply more towards your domestic side. Domestic side, when I mean domestic side, again there are two different things. One is your distribution business, which is more of a B2C business, and the other one is your institution. Like for example, real estate, or maybe you're sending it to the government. These kind of contracts, right? That is where more or less you can tell कि a business model में थोड़ा फर्क आता है. And the third and the second part of it is the FMEG goods, right? FMEG is nothing but fast moving electrical goods. So all these companies, Polycab and especially Havells, these people have a certain part of the revenue coming from आपका FMEG, which is nothing but आपका fan, light, switches, आपका geyser, heater, all of these things. Okay, so पहले हम बात करते हैं Polycab का, which at least used to be the leader in this space. It used to set the benchmark over here. In terms of growth rate, अगर आप देखते हो Polycab का, it is good. Revenue is 30%, because again Polycab has never been the kind of company that had guided कि हम 40% करेंगे. They've always been the kind of company that has underquoted themselves. So if you look at the sales growth is quite good. In terms of अगर आप year on year देखते हो, it is 30%. अगर आप QOQ देखते हो, it is 17%. Okay, but the problem comes over here is this company as of this quarter has missed a huge in terms of has missed a huge mark in terms of operating leverage, because the PAT that is there hardly grew by 4% on a year on year basis. And अगर आप QOQ देखते हो, QOQ it grew by 11%. Sales grew by 17% QOQ, but PAT hardly grew by 11% QOQ. Okay, and even if you look at their margins also, अगर आप EBITDA margins का बारे में बात करते हो, EBITDA margin is at 11.5%. Last time Q2 it was 14.4. PAT margins भी वही है, 10.8 था last time, अभी 8.2 है. So you will see all the metrics in terms of growth है, but you will see all the metrics in terms of margins, PAT, which are the second part. Like you need two things, right? In terms you need to be a twin power engine. एक होता है sales growth, एक होता है आपका operating leverage, EPS का growth and everything. Now you will see here, एक तो अच्छा करे, दूसरा तो गिर के बैठा है यहाँ पे, right? And when such things happen, what especially, and when you are a stock, when you are a company that has been consistently providing a good set of numbers, and you're also having an operating leverage, market has rewarded you. All of a sudden now when you're market has rewarded you with a higher valuation, and अभी जाके अगर आपका एक भी metric नीचे होता है ना, then like market comes and slaps you. Okay. That's what happens. So over here, if you look, the reason why you can see that their operating leverage is not there, उनका margins थोड़ा कम हो रहा है यहाँ पे, is two reasons. One is उनका बोलना है कि like commodity prices, there is a fluctuation. The second thing is, if you look, जो उनका domestic business है, वहाँ पे the competition has been intensified over here, which means what? They're losing market share probably over here. The third thing, the other aspect over here is, like I told you, right? There are two aspects of the business. One is the domestic business. Domestic business में what I mean is distribution business, and the other one is your institutional sales. Okay, your distribution business, which is your B2C, जहाँ आप एक wholesaler का देते हो, फिर वो wholesaler जाके retailer को बेचता है and everything. This has a higher margin, right? And you are able to pass on the price easily. Let's say when the commodity का price fluctuates. But when you are in institutional, when you are catering more over there, what is happening over here is you'll have to go back and forth in terms of your prices, because you work here on a basis of contract. शायद आपका 3 months के लिए you fixate on a particular price. So going forward कि like even if the raw material का price fluctuates, you have to stick with that price that you agreed with the vendor. Okay, so that is a problem over here. And here over the past few quarters you're seeing उनका जो distribution business है, that is not performing really well. They're losing market share over here. And not just that कि like उनका institutional business is growing, which is a low margin business compared to your distribution business, right? So change in mix, change in आप बोल सकते हो एक business में थोड़ा change in mix हो रहा है. As a result, one margin has impacted because like I told you, distribution is higher margin compared to your institutional. Second, competition has been intensified. To make it worse, even the raw material ka fluctuation is there. Okay, so all of these three has killed, literally killed, I wouldn't say killed, but has impacted, I think impacted is the right word, has impacted the margin, which in turn has put pressure on the PAT. The other reason is, like I told you, Polycab has multiple divisions, right? It has one cable and wire, which is the most prominent. That is where the majority of the revenue comes. And then you have your FMEG part, right? If you look at FMEG part, here also the losses has been dragging. Last quarter, I think, if you look at EBIT, that is there, right? Unka earnings before income tax, that was minus 60 crore in last Q2. This Q2, the EBIT is at minus 250 crore, right? So the losses has widened on a huge, very much. I think you can tell almost 4x losses, right? Reason is because again यहाँ पर भी वही कि like अगर आप देखते हो Q3, the festivals that are there that happens like Dasara and Diwali, this time it is a bit early compared to last year, so they had to spend a lot on advertising and marketing. That has increased. As a result, again, along with the other three reasons that we discussed prior, this also adds pressure to the margin. Okay, if you look at the switches and switch gears, again volume growth is there but price erosion है because the entire switch category में क्या हो रहा है, there is so much competition, so you do not have a pricing power, okay, over here. Because at the end of the day, when you talk about these commoditized light, like example आपका LED light जो लगता है, bulb लगता है, you don't care किस brand में लगता है, right? You will see कि like कौन सस्ता में दे रहा है ultimately. So this is where they are not able to actually it's not just this company, any switch companies which is a very commoditized like Cisco, Philips and all of these people. What is happening over here is, since you do not have any you do not have any pricing power, everybody has to underquote आपका value growth नहीं, so यहाँ पर भी एक price erosion हो रहा है. Other than that, if you look, this is the main, I can tell the main things that has happened over here. Segment wise, if you look, उनका जो wire and cable business that is there, that has grown by 28% on a year-on-year basis. अगर आप उनका FMEG देखते हो, FMEG grew by 18% on a year-on-year basis. But having said that, the EBIT that is there, the losses that is there, has literally been multiplied by 4x. The last thing, if you look over here, is their international business. International business grew 36% QOQ. I do not know why they have given a QOQ data and have not mentioned the year-on-year data. I tried to find from the PPT, the press release and everything, but there is no data on year-on-year. Only QOQ hai. I mean, what will I make sense of QOQ data? There can be so much anomaly in terms of QOQ, right? And right now, the international sales contributes around 6.1%. Last time it was 5.7%. Even this is a bit good that the international sales are increasing because यहाँ पर भी margins higher है. Overall, the biggest problem right now with Polycab is the fact that, see, the market has rewarded here with higher valuation to the company because it kept performing. Now going forward, when even a little bit problem comes, it is it doesn't look well for the business. The main problem over here is company losing out on the operating leverage. Margins are coming, and the management commentary, the way they tell, like, yeah, I understand the demand is good, but when you're losing to the competition, that is a bit of a negative mark. We'll have to wait and watch for the con call, to see like how bad probably the situation is, and wait and watch over here. But right now, just not, I would say it's not a, I think always when Polycab ka numbers come, it used to be like, wow, it just doesn't give the same kind of feeling right now. The second company that we have right now is Havells, okay? If you look at Havells, I'm actually, to be very honest, I'm a bit surprised with Havells ka result, because Havells grew the sales by 16.5% on a year-on-year basis. And if you look on the PAT grew by 9.4% on a year-on-year basis. Why I'm telling I'm a bit surprised with the result is because Havells, if you look, Havells ka market cap is around 1.1 lakh crore. I think it's around that. And if you look KI is around 40,000, 45,000 us crore ka market cap, right? 45 lakh crore, I think. Now here is the thing, right? If KI, which is like literally 1/3 of Havells ka size, is growing also at 15%, Havells, jo itna bada hathi hai in this entire wire and cable space, is growing at 16.5%. That ultimately, here the fact that an elephant is growing faster than the ant, like imagine an elephant and ant are racing, right? Ant can run faster because of the size compared to an elephant, but the fact that your elephant is doing much better puts a lot of pressure on the ant right now, which is KI over here. If you look at Havells, even here also, Havells also has multiple divisions, right? If you look, the wire and cable division that is there, right? Yeah, the wire and cable division also didn't do bad. Wire and cable division grew by 23%. Polycab का कितना था 28%. इसका यहाँ पे wire and cable division grew by 23%. So it's not that, I mean, literally the size is small compared to KI and size is bigger compared to KI and Polycab, but it is growing also at a similar rate over here, right? That is one thing. And the other thing where they had a benefit over here, not just the wire and cable ka business, is if you look at their FMEG business similar to Polycab, it has done really well on account of small base, because last time if you remember in the FMEG space there was a huge problem which was fans का कुछ regulations का change हुआ था, you know, they had to go from one BD, I think BD5 to BD4, something of that sort, and you know, because of which there was a lot of this inventory ka stocking and everything. So now since they're operating on a very low base, because of which, you know, the FMEG business looks really well. In fact, if you look, the FMEG business, that is electrical consumer durables, has grown by 17%. Polycab का कितना था 18%, right? So like I told you, Polycab 18%, ये 17%, wire and cable का Polycab का 28%, इसका यहाँ पे 23%, okay? So overall great. Even in terms of KI doesn't have that FMEG division, but the fact that the sales growth is literally, you know, like वो भी 15, ये भी 16 कर रहा है, it puts a lot of pressure in the small players, okay? इनका कहना है again, the reason why the same narrative as Polycab, the reason why they are losing out on operating leverage or margins has been a bit under pressure is because the raw material prices was not all time high, was high, and they bought a lot of inventory. अभी prices कम हुआ है raw material का, and they're left with high cost inventory. That is one reason. Second, similarly like Polycab, because the festivals that are coming up in Q3, you have to do a lot of marketing spends. That is also happening.
Battery below 50%,
so
PNA.
Havells, Polycab and KI, like I told you, KI ka sales grew 15% and PAT grew by 10%. Polycab, on the other hand, grew sales by 30%, but PAT grew only by 4%. All metrics are year on year. Havells, on the other hand, grew by 16% and PAT grew by 9%. Now it puts a lot of, like I told you, right? Sara company, if you look, whether it is Polycab, KEI and Havells, everything is at such high PE, right? And now you're coming and you're doing like 15% ka growth, or and on top of that you're missing operating leverage. It really does put a lot of pressure right now, you know. I mean, see, ultimately if you want to have that PE rating, that faster rating, you have to keep performing really well every quarter. You know, it becomes imperative so that your journey is not broken over there. Now here, the entire wire and cable space looks a bit pressured, you know, like thoda sa pressure has aa gaya hai, you know, with all the competition intensifying, with the raw material ka price and margins looking. So I would say this quarter has probably not been the best for wire and cable industry. Okay. The third company that we'll be doing is Ceat. Okay, Ceat एक basically टायर कंपनी है. वो टायर बनाते हैं for different vehicles, from 2-wheeler, 3-wheeler, आपका, you know, different types of truck का tires, bus का tires, passenger cars का tires and everything. Okay, now even in tires, when you talk about, there are two important markets. One is you supply tire to OEMs, that is, let's say Hyundai or Maruti, you know, who manufacture your car, you supply it to them. The second category is your replacement category, which means what? Let's say, for example, your tire, you know, you have a what do you call that, wear and tear in your tire, okay, and you want to replace. जब आपका tire का थोड़ा सा scratch होता है, you're not going to replace your entire car, na? You're just going to replace the tire over there. So this is called the replacement market, where, you know, when something goes bad, you go there, go to the local mechanic shop or go to the tire shop and get that. Get that. So here's the thing over here in Ceat, if you look, it has been a very tough quarter or year for them, because they are the kind of company that has only grown by single digit, only until and unless, you know, you're in that upcycle of auto, then of course the entire value chain does well, right? Because agar auto ka manufacturer acha kar raha hai, then whoever is part and parcel of that industry, whether it could be someone doing light, whether you could be someone doing tire, you will also do well only, right? Of course it goes, because everybody gets benefited from there. Now other times if you see, they've been a single digit growth engine, and last time agar aap देखते हो Q1 में their volume grew by 8.6%. Okay, now here is the thing, right? Like there are times, you know, where we see, like, you know, I'll tell you this, there is this mentality कि like एक stock सस्ता है, you know, it could be because in terms of maybe from valuation perspective you see that कि like अरे एक stock तो like let's say for Ceat, I think Ceat is at 17 to 20p, and you feel like, अरे इतना सस्ता stock है 17 to 20p, but you never bother to question कि like भाई why is this at 17 to 20p? इतना सस्ता क्यों है? That too in a market where everything का PE is inflated and everything, right? So why? Now if you go back and look, there is a problem here inherently with the business model, is because here if you look at Ceat, although it has been operational for so many years, since the kind of industry that they operate is very tough. What I mean is, let's say अगर आप टायर बनाते हो, right? One is it is a B2B business. पहले तो आप OEM से आप अपना सप्लाई कर रहे हो, and on top of that you have to buy a raw material such as your natural rubber, जो black carbon होता है वो टायर का जो black color देता है and everything. So you come under a lot of pressure in terms of your margin, because constantly there is this working capital cycle that you have to pay upfront for to get your raw materials, but once you supply your product you also get the money later. It is after 3 months, 6 months, whatever the period is there. So that is one. The second thing is, if you look at the business, right, if you see, you do not have any kind of, you only survive on volume growth. आपको कोई value growth नहीं है. What I mean over here is, if you let's say take it from your own personal experience, okay, let's say आपका टायर खराब हो जाता है, और let's say you're going to buy a car also. Are you really concerned कि like अरे इस टायर मुझे Ceat का टायर ही चाहिए, मुझे अपोलो का टायर ही चाहिए? So these people, the entire tire industry will not be able to position themselves in terms of brand, because it's a very commoditized product. Again, that is one thing, okay. I think even when you go to get the tire, the rim of the vehicle you will choose, the rim of the tire, you would want to modify, but nobody modifies or be like, oh, मुझे Ceat का टायर बदल के मुझे अपोलो का टायर चाहिए. The third, since the competition is so intensified over here, what happens is, if when it comes to increasing the price, let's say कोई raw material का price ऊपर नीचे होता है, okay, and you have to counter that, you have to increase the price. What happens over here in this tire industry? If Ceat is increasing the price, even Apollo has to increase. You can't increase the price and then expect like you will be able to help your margins over there. That doesn't happen, because if you increase the price and let's say the other people in the industry are not increasing the price, then you lose out on your volume growth, because that is how it works over here. Because somebody might not like, there is no speciality in terms of your product, there is no USP, people will automatically switch over here. So none of these people have pricing power. In fact, they have this union, I think this tire association, something is there, which is like a regulatory body for them, or like an association. So they all have to come in how do I put this? They all have to come together to agree on a fact that you have to have a price increase. It's very, very tough for them to increase the price over here. Very, very rare. I think the only people I think is this Balkrishna Tires, that one company is there, that enjoys a bit of a higher margin, better volume growth. Again, the reason is because they're not commoditized. Because ये लोग अगर आप देखते हो Ceat mainly sends it to आपका 2-wheeler, 3-wheeler, basic tires उनका. Whereas Balkrishna का their tires are specifically made for this off-road vehicles. ये बड़ा truck का बड़ा tire होते हैं ना, those kind of things. I'll cover that some other time. But they have a USP in terms of the product that none of this, whether it is Ceat, Apollo, JK tires, none of them have, right? Again, so that is the thing. Again, revenue, if you look at it, the same thing. Revenue is up 8%. It's a very basic single-digit growth engine. And if you look at the PAT is down by a whooping 44%, right? And 41.5%. It's, I mean, now you understand why why a stock is so sasta. Because मैं 8% का growth के लिए, why would I invest my money in a stock जो why would I want to invest my money for an 8% growth when if you combine the growth rate of the country with the inflation is only you get around 12 to 13%, when I can keep my money in FD and get 6 to 8% without any volatility, without any headache. Why would I come to the market, take so much headache of the volatility, मालूम नहीं कल क्या होगा, आज क्या होगा, कल का quarterly result क्या होगा, everything, for just an 8% का growth engine? It makes zero sense. Now you understand the fact that it is a single digit growth engine, hardly any growth, the fact that they don't enjoy a lot of any times of pricing power, volume growth is not there, in terms of उनका operating leverage miss हो रहा है, EPS is not there, इतना सारा problem है. In fact, in last call they told कि raw material का prices इतना उतर चढ़ाव हो रहा है, थोड़ा demand में भी problem हो सकता है. That is the reason why a stock is sasta. Otherwise you will never find, if a company is doing well, there is no reason that stock would be cheap. Absolutely no point. You take any stock that is trading at all-time high, you will see that there is something good going on with that business. Now you understand. So always question, whenever you come across a company and you see कि like iska valuation kam hai, there is always a reason. There will be one thing or the other you will find, you'll be able to nick in that. Okay, so that's that in terms of Ceat. The last thing is Nestle. I mean, You remember I keep always telling you should be able to reject the companies quickly, because there are so many companies you have to analyze, right? So the only way you'll get through it is you have to be able to reject things quickly. Okay, then only, I mean, you can't sit and analyze everything deep. Nestle is a very perfect example of that. The fact that inka sales grew hardly 1.3%. Okay, like, I mean, it's just 1.3%. What is there to further look at it? Tell me something that good will come out of it. Even if I dig deep, there is nothing. Of course, उनका operating leverage thoda bahut hai, but again, what would I do with that operating leverage when the first and the most important parameter, which is your earnings growth, is not there? That is the most important thing, right? Because आप operating leverage कैसे भी दिखा सकते हो? You probably finance cost को you're getting it down, debt को कम कर रहे हो, probably आपका COGS कम हो रहा है, आपका employee cost कम हो रहा है, or maybe you're doing some cutting, your supply chain is getting better, so because of that you're able to gain the cost, which is exactly what Nestle is doing उसके वजह से. But what will I do with that operating leverage? Ultimately, my danda has to sell more of its product to make money, so that I as a shareholder can make money. But if you're not doing the first thing properly, right, then what is the whole point, right? Everything goes out of the toss. So you should be able to, like, how do I put this? Reject the companies quicker than the time it takes for you to go to the BSE and open the PPT. That is very much important. And here, Nestle is that one very good example. Like 1.3% sales growth, boom, keep it down. There is no point in going through the balance sheet, in going through the cash flows. You're not going to find anything other than you'll waste your time. That is it, right? So that's how you actually have to be quick. Anyways, that's that for today. Polycab, Havells, Ceat, and Nestle. Just a bit disappointed, I would say, in terms of the wire and cable industry, because everything is at such high valuation, and right now you see that things are changing, I think, for the worse. Let's see how the con call goes for all the company, and we also have to see कि like अगर बड़े companies में इतना problem आ रहा है, we'll have to see how those छोटा companies are there ना, Dynamic, Delton, Quartz Cable, Paramount Communications, and there is another one, Universal Cables. We have to. I'm very much interested, how that entire 5 players pan out, and we'll see con call में क्या होता है. Probably something positive comes up, or who knows, H2FY25. At least it will give the direction as to like how the H2FY25 goes. But just looking at the result and the kind of valuation it is at right now, it is a bit, I would say, a bit disappointing. At least compared to what it used to be. So that's that for today's video. I'll see you again tomorrow, and that's that. Bye.